Good evening, this is JP Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @Fibstalker nickname. Good evening. Today is Sunday, January 27, 2013. It's 10:30 p.m. Italian time, and this is the second part of my Fibstalker view on currencies, which I'm going to review the for forex pairs, the US dollar versus the Japanese yen, which is the chart you see here, the pound versus US dollar, the US dollar versus the Canadian dollar, and the Aussie dollar versus US dollar. So let's start from the US dollar versus the Japanese yen, which you see on the screen is the weekly chart. And we have been looking at this chart from a short viewpoint, because we had identified this sequence of measure move on the weekly chart, and however, this technically this sequence failed, because after hitting the first target here, the next extension basically failed, and actually we have to consider these charts now on the long sides, and actually, as we can see, this currency has been strongly devalued against the dollar in the last few weeks, due to the strong intervention of the Japanese central bank in the currency war that is ongoing. So all the countries are trying to devalue their currency against each other and against the dollar. So that's why we are seeing this huge move higher. I will show you that this market is not as technical as it was before, and this is due to the strong intervention. So we have to be very careful I advise you to be very careful in this market. In the last in the last week, I thought this level this level here, which is basically it's the 84.20, could act as a valid anchor, but this is not the level Program Trading is using, but they're using a different level. The level they're using is this high, which is a little bit higher here. And as we can see, if we trace to the one of the previous highs, we can see that price is showing support. So the right level is the 85.50 area, and this level provided a valid support level in 87 basically. Price came up to 89, and the second target 90, and then it came back. Unfortunately, unfortunately this anchor is not working anymore at the moment, and that's again is because this market is not technical due to the strong intervention of the banks, of the central bank. As we can see, this level never traded, and the next level was actually front run here. So 87.90 never traded here. However, we can consider this as an approximation of a good approximation of the next level of support, and this level of support as basically targets higher. I'm going to show you those targets in a minute. It's a bit slow at the moment, so let me scale this chart a little bit, and I'm going to show you where we could see this price moving. we have a target above in the 91.30 area, so we are almost there. However, this pair is not very technical, so what I would do, I would wait for a failure of this sequence on the daily, and then try to catch the next level of support that could come lower at 86 or 85. Moving to the pound, we have this is the weekly chart of the pound, and we have this measure move lower. This is a level of resistance that has been working now for some time. It's the 164.20 level, and it worked in 2009 and again 2011, and again it seems that this level of resistance is still active, and that's what is pushing lower this pair. Now, on the other side of things, we had bulls as well, located in the 52.70 area, and they supported pricing at the beginning of 2012 and then again mid 2012. So this is definitely a level of support at the moment. However, as we can see clearly from the daily chart, this pair is actually moving lower. Now, in the past, we had been using this level of support, but as we can see, this supporting 158.50 did not hold recently. Did not hold price, and also the all the way back, it seems not very strong, although we had a reaction, some sort of reaction, but price dipped below this 157.90 area. Now, on the daily chart, we have clearly a sequence of measure move lower. So the first setup came at 161.80 area. It was a short which hit the first target in 158.90 area, and the second target, it was the low, very close to the low of last week at 157.50. Now, this it's not a case that price stopped here. We had profit taking here, and I believe this profit taking can continue at the beginning of the week, bringing price into this 158.70 area, and we will need to understand whether we then continue lower into the 156.90 area, or we move above that previous first target and 59 level here, and we start to move higher. So at the moment, I'm more prone to believe for first scenario continuation lower. On the blog, you can also find my trading plan, updated trading plan for this pair. So I'll recommend you to read that. Let's move to the US dollar versus the Canadian dollar. This pair had me baffled a little bit, because we have this level of resistance here. It traded mid of 2010, it broke price into 0.94, 0.95, which was a target, and then the next level of the next measure move short actually failed, as we can see, with price going above 102.92. However, we also had this same anchor new low, which actually was able to offer an important resistance to price. Now, and on the other side, the longs also failed. So clearly this pair is moving on the weekly time frame. It's moving it's moving in a sideways action. That's exactly the definition of a triangle, when both longs and short fail. Now, we also have moving back to the last half of 2012. We also have two measure move here. The first one is on the short side. As we see, there was a reaction in November, mid of November, at around 10040 here, and on the other side we have longs, and longs are actually trading with offering a support in 0.98 here. So At the moment, this chart is moving actually from between these two level of support and resistance. Support is 98.50 and resistance is at 100.40 here. Now the long setup as a target above this 101.40 area, which would represent a failure of the shorts here. However, as I'm going to show you now on the 4-hour chart, we might have here a violation of this sequence of measure move higher, and the sequence actually started as a sequence of extension long, which brought price went through the second target, as you can see in this extension. So the next measure move actually came from the 100.05, basically from parity here, and we hit first and second target here. The second target was at 100.50 area, and the next measure move higher, as we can see, failed the 61.8 level here, and this could mean a reversion here. However, this could only be a situation in which price is just coming back to test this 100.20. So an actual reversal, there would be an actual confirmed reversal if we move below 100.04 here, and that would be for me a confirmation that this move higher that we saw here on the daily chart is actually completed. And as the failure came within a daily short area here, resistance area here, then we could see a continuation lower. Finally, let's move to the Aussie dollar versus the US dollar pair, and we know on the weekly chart we have this level of support here, which worked twice at the end of 2011 and mid 2012. It has targets above into 117 area, but at the moment we are seeing weakness in this pair, and it's clear on the daily chart. So in the past few weeks we have been looking at this level of support, which worked well, besides dollar strength that should have brought the price of this pair down, but as we can see, the price of the Australian dollar went higher even in the face of the fiscal cliff rally of the dollar, and it also held initially this level of support in the 104-105 area, but as we can see last week this area failed. So we have now again support in the 103.70 area, but this is going to be a second test, and as we know, second test is dangerous. So people who actually sustain price here, bought into this level, participate at the 103.70, can actually give up, and so this is a very dangerous level for me. What I'd like to see is what we could actually look at is look at a retracement into this from the low, from the 104.80 area to lows, but before we get into this area. So if we retrace into this level before we get to 103.70, I would be happy to short this pair with a stop above 104.60 actually, and but if we get to this 103.70 first and we bounce, then it means that we have long participation again, and any shorts would be dangerous at that point. So be very careful with this pair. I think you can use this anchor here to lows, and to get reasonable entry points. So I hope this update is useful. I will post this as part of my newsletter I'm going to send in a few minutes. Thank you very much for your attention. Have a great week. Bye bye.